Well, let's start with one of the big brand names, if you like, in financial services, Barclays Bank. Their first half results. What's been happening there?
Excellent. The results were out yesterday, and Barclays reported modest returns from the first half. But looking back, we're looking at the last 6 months where we are talking about the economy going through an interest rate environment, a very high interest rate environment. And we are saying that for this bank, this was good performance. But of course, compared to the other banks which have released their results, we have seen Barclays coming a little lower. I think what I would comment about Barclays' results is that they have not grown their loan book significantly, and also they have cut on the deposits. They were not aggressive in picking up deposits during a high interest rate regime, and therefore we saw their deposits or their liability go down slightly at about 4.5%.
Has there been interest, Elizabeth, in Kenya on the parent bank's problems with Bob Diamond and so on, and contagion, if you like? We talk in South Africa about ABSA, one of our big four banks, which of course is a subsidiary of Barclays now. Not the same name, but there is a link, and certainly the market was interested in the link between them, although no suggestion that the local bank was in any way fragile or shaky because of that. So the link in terms of the Kenyan branch or subsidiary of Barclays?
Not quite. I think there has not been any contagion from the effects of the Barclays PLC. Nothing much from the Kenyan perspective. I think it is their strategy going forward. They have not been aggressive. They were not aggressive really in terms of picking deposits at very high rates, and that is what cushioned their spread, their net interest margins. So we saw them record very good margins. But on the other hand, I think Barclays was careful not to do aggressive lending at a time interest rates were very high. So really, I wouldn't tie them to their parent company. The relationship is a weak one, not very strong. Okay.
In the direction of interest rates, you mentioned the interest rates then. Of course, banks, part of their key income is from interest rates. So on the one hand, they might not be lending. On the other hand, there is income to be had from money invested if the interest rates are high. So give us the interest rates context and the likely direction. I think there is a declining trend now.
Sure, you're right about that. The interest rate direction is downward. We are headed south. Several factors that are leading to this. One, we have seen the central bank start the easing program since the beginning of the financial year, government financial year 2012-2013. The central bank has eased the CBR rate to 16% from 18%. So that is one of the signals. The second factor is that inflation has been coming down quite fast. We saw inflation print 7.7% in July, which was quite a surprise for most of the analysts. We're expecting it to go to around 8% from 10%, but went to 7%. So that's another factor that is going to significantly affect how interest rates develop. Then there's also the fact that government borrowing program is not so heavy for this financial year, and therefore we are not likely to see a squeeze on the governor trying to borrow heavily from the domestic market. So therefore, I expect the interest rate environment to continue on the downward trend and maybe settle on a single-digit number in the coming months.
Okay, so there's interest rates and the inflation rate as well. The growth picture, I mean, we in South Africa have growth possibly of 2% coming up this year, and many other countries in Africa much higher growth rates, and we look with envy to our north to see the kinds of growth that are expected. So in the context of those rates that you've just mentioned and the management of the economy by the central bank, what are the growth prospects and perhaps particularly for the banking sector expectations, seeing we were talking about Barclays?
The banking sector in Kenya is very interesting. I think this year is still going to be a fantastic year for them. We're still going to see very good returns from the banking sector. I think most of the banks who have showed us their results for the first half, they have done pretty well. And the first half of this year has been the challenging part of the year, and considering that they started at a tight monetary policy level where the CBR rate was at about 18%, and still banks were able to lend, banks were able to take advantage of the high T-bill rates. Going into the second half, I think it is going to be a ton of events. They're not going to earn their income from the government securities as they were doing previously. I think what we are going to see is a bit more of trading. The fixed income market is opening up. You're seeing a lot of trading, and banks are the largest traders in this segment of the market. So we are going to see them record some good returns from their fixed income portfolios, considering that now interest rates have come down, and therefore their mark-to-market values of their bonds and their bonds is going to be quite good as we come to the close of the year. So really, it is a good time for the banks. I think in Kenya, it's going to be still another year where they record impressive results, and this will be reflected even in the stock market.